Alright, so this video is going to be like very straightforward. It's basically to help you find liquidity. What is liquidity and how we're going to use it. So I'm just going to choose any stock at this point. Let's just say Tesla. So your liquidity area is basically where the market opens for the day. Our market opens at 9:30 Eastern time. So on a 5-minute, 1 minute, doesn't matter. Just have to check whatever if you're going to be trading in a 5-minute, whatever zone that you're going to use, just based on the time frame that you're on. Like for example, I could be on the 15-minute. In the 15-minute, the 9:30 will tell me 197.13, but on the 5-minute, or was that 137, 197.13? The 5-minute opening is 196.81, so it's not 197.13. So see the difference. So obviously, just based on what's the major time frame that you're going to be using, you can base your liquidity zone around that. I'm going to do this one. So remember, it's literally where the opening is. And why is this so important? Because that's literally where a majority of people place their orders for the day. So usually these areas are highly respected. Usually we get big reactions off of these areas because there are a lot of orders waiting to be filled. So that's one. Alright, that was the easy one. Now let's just go back and find the previous day, 9:30. Once again, see at the very top, 194.69. 194.69 is right there, right over here. So I'm just gonna draw my zone somewhere in that area, just like that. And that's the simplest way to find the liquidity zone. Now, how can we use the liquidity zone? Now let's switch to the smaller time frame. Now that we have it drawn out, usually we want to look for a break and retest. So you want to look for a break and retest to the upside or the downside. So for example, we had a break through the zone. We came up. We came down to retest the zone. This was looking beautiful. We didn't close below the zone yet. Neither are we closing above it. We're just neutral. Price starts to work its way down. It closes below, which makes this entry invalid. Now we have to start over. We do a break and retest to the downside. This would have been a great entry if this never closed above the zone. We closed above the zone again. So now we're starting over. We're still looking for a setup. So I wouldn't be trading anything yet. So we did a break, we did a retest, we broke through the zone again. Okay, we broke through the zone again. Now at this point, like if you were looking for a good trade, you wouldn't have found one unless you just kind of scalped at this point, because we literally didn't get another break and retest. We pretty much just closed a bunch of 5-minute candles consecutively. Now usually if you can't identify it on the 5-minute, some people actually go to the 1 minute where you can actually see a lot more of the move entries and see what happens. So we get a break and retest, break and retest to the upside. I would have marked that. I'm not gonna make this video about something else. It's only supposed to be focused on the liquidity zone and a break and retest. So I guess we tried to do a break and retest. We got stopped short. We did it twice. On the 1 minute chart, you're able to see absolutely every single move that's going to be playing out. So for every call, every put, you're seeing the buyers and sellers reaction to it. So we got stopped short twice. We made a higher high than these previous two, so I would have already been looking for buyer sentiment. I would have entered in off of a pullback. We got pullback. I would have entered in right here. I would have rolled the chop out, bam. This would have been a nice play. Nothing but green. I would have probably gotten out exactly up there somewhere around this area after we started to get some pullback. And I saw the buyers try to enter in and they got stopped short. Realistically, this is where I would have gotten out at. But that is basically where liquidity is. Like I said, is price reacts a lot around it. Even if you go into the previous day, you can see we had somewhat of the same thing. Like prices came to this area multiple times. We did a broke at the beginning, we came down, retested the area, broke through, retested to the upside, broke through again, retested, and it should have took off like that, but we broke through again. So now we're doing a retest to the downside. For anybody that would have entered puts right here based off of this candle movement, would have already got stopped out like at the very beginning. They got stopped out. If their stop loss would be placed like right here, they would have already been out. We came over this, would have entered in off of a pullback. At this point, whenever you cannot find a break and retest, you look for a pullback entry, which means sometimes you may have to scalp. And for this example, you will most definitely have to scalp. We got pullback. I would have entered right here. I have my stop loss probably down here somewhere, and I'm down. Or pretty much we're going. We get some pullback once. We make a higher high. we get some more pullback after I've gotten 2 consecutive pullbacks like that, I would have already been looking to get out of the trade. I could have also easily drew a trend line starting from there to there. And as soon as candle broke below it, I would have been looking to get out of the trade. But remember, that's not what this video is about. But I hope this made the video a lot easier in terms of finding the liquidity zone. Remember, we're just looking for a break and retest. We have break and retest, break and retest. I want to look for a clean one just before I go. Let's look for a nice clean break and retest. This one was really clean. Okay, so 930, 200.81, 200.81. All right, somewhere right there. Okay, so we did a break and retest to the upside. We broke through the zone to the bottom. Now this is a clean break and retest. We broke through, right? We came up to retest. We bounced off. After we bounced off like this, and we had a second candle on confirmation, this would have been a momentum candle. So I would have probably been buying a little late to this. I'm just trying to keep everything realistic now. We can't say now like we know exactly what price is gonna do, because we don't. But I would have bought in somewhere in the midst of this going down and have my stop loss at the liquidity zone. And now we're riding this out. We get another retest again to the upside. Price gets stopped short, and we continue a downwards momentum for the entirety of the trade. Realistically, I would have probably gotten out somewhere around here just after we had a lot of chop consistently. And if I did stay here, now I would have been worried about time decay because of all the chop, and we're going to the upside, which means I would have to stay in the trade longer just to get back to where we were originally. So just remember that. Just take your profits when you're up, so you don't have to go through all of this, which is extra time decay, which is going to wear down your contract. Plus, you're going to garnish profits. You're going to be at the same profit area, and you're going to be closing over here when you was like, dang, I was already over here the first time. I could have just did the same thing if I wanted to close in this area. Obviously, we see that it had a bigger move to the downside, whatever. But once again, we never know how a price is going to play out. So it's just better to always play it in the safe run. Look for small point moves. In your case, going from around $201 down to $197 is still more than $2 to $3 a movement. If you have a delta around 0.4 to 0.5, you get $40 to $50 a contract. $40 to $50 per $1 just with one contract. So imagine if you're buying a few of them, you would have already made enough money right here and gotten out for the day. But I hope this video clarified everything.